Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. Today's video, it's going to be a recap of the Sonos earnings trade. Uh, Real simple. Uh, kind of want to talk why we like the setup, and obviously, we'll talk about why it isn't working. Basically, what went wrong. Um, First and foremost, this was a name that came up on our screener when we were game planning for the week ahead. It was just we felt it was a really interesting setup. Um, for a week that was a little bit lighter for scheduled news. This definitely was one of the top names that were actually scheduled to report. And actually, there's been a handful of recent IPOs that are reported over the last couple of weeks. Sonos was kind of like added into the list of a bunch of recent issues. So like BJ, Domo were a couple of ones we did, but for whatever reason, a bunch of kind of like recent issues are reported, in like this week and the last couple of weeks. So it's been a kind of a handful of these setups. Uh, Sonos, we hadn't traded this one since it came public. Uh, watched it, let it develop. We're keeping an eye on it, but it just hadn't really given us a reason to get involved. Uh, when the earnings were confirmed, and when we were game planning for the week, we started to do some technical work and look at the options, and uh, it really started to get interesting, and we definitely had a bullish bias on this one. And as you can see here, this is the daily chart since it came public. I mean, you can see it had a really nice 2 day move. So a pretty big move day came public, and then some quick follow through the second day, and those two sessions actually marked the high and then the low of the stock since it's been public. But what you can see is just even though it pulled back, you can see there's just this really steady uptrend. Lows have kept increasingly getting higher during August. It's like a real steady higher lows. Obviously, it topped out again later in that month, but then once it rolled over, steady higher lows, higher lows. So what we noticed was buyers have been getting a little bit more aggressive, and the stock clearly has overhead resistance between 22 and 23. I mean, it's pretty well defined resistance, but the highs have been getting lower. The lows have been getting higher and higher, which is a nice sign of buying demand. Um, so we had like a bullish bias going into this one. Uh, just you know, people that have traded for a while. I mean, the way like these IPOs work is like so some of them are non-events, but then occasionally you'll have one or two that just go absolutely bananas. And Roku maybe. There's plenty of examples, but Roku last year maybe one of like the better uh, examples of how that worked. If we just go back and look, uh, Roku was also like another like hardware play. Came public, slightly different setup and acted a little bit different, but uh, it had just a monster 1 day move when it reported its first time as a public company, and it just continued. And I mean, really has never dropped to retest those prices. So, whenever we have these new issues, I mean, they don't all work exactly the same, obviously, but there are instances where you just see these really outsized monster moves, and most of the time it's higher just because of the nature of like the new issue. Like people don't really know what to expect, like the numbers. Uh, there's been instances where the stocks have really gotten hit as well, but I feel like most of the time you see like these much sharper moves higher. The company guides for the first time, people get accustomed to the numbers. Uh, when we were looking at Sonos, we were saying, okay, there's some similarities, market cap wise, a hardware name. pretty heavy like retail interest. Uh, so we had a bias. We liked the way it was setting up. Um, we'll get to this in a second. So coming in, we looked at the options and we we noticed that they were priced in about 3.5 points. So um, that's quite a bit for a 20. Say $20. I mean, it closed Friday, a little bit under 19. So it's a pretty big move. Uh, so when you get options that are that expensive, we try to like lower the debit, either by calendar spreads or sometimes we'll do butterflies or just regular like call spreads. So in this case, we wanted to do a call spread. We wanted a little bit lower debit, uh, and the target for us would be, so if it was good, we were looking for a retest of this 22.50 to 23 area, which we thought was like a reasonable first target, uh, and then a measured move above that, about 10% measured move past double top resistance would put it about 25. So we really like the way the September 22.50 25 call spread kind of lined up with our targets. So you had a really obvious near term target, and then if the numbers were good and it really took off, and a big breakout, 25 would be a 10% extension, and that lined up perfectly with the options that were available at the time. Actually, there weren't options available above 25, so it actually really worked out perfect. And we liked it. We liked the risk to reward. The spreads were trading anywhere between like 30, 40 cents in that area. So coming into the week, it was one of these ones we had circled. We wanted to get involved with it. The risk to reward we thought was favorable. Uh, so we were game planning, and then all of a sudden Monday it just takes off, rockets out of the gate, and just starts running. People piling in ahead of the report, and these types of moves typically give us some pause. We don't like when stocks have big runs right ahead of earnings. It means expectations can kind of get one-sided. Uh, like if it has like a huge run, then for us, we're thinking that maybe good news is getting priced in. And obviously, if it drops a lot, then you're thinking maybe bad news is getting priced in. So typically, we don't like that. In this case, it had a big move, but it still didn't retest 22.50. The options obviously increased in value, so like the call spreads went from 30 to 40 up from like 40 to 50 to 60. So in terms of the net debit increase, but the risk to reward still seemed okay, even after like Monday's big move, because it hadn't technically broken out yet, and uh, you know the options, yes, they cost more, but there was still enough left on the trade to warrant getting involved. So that's why we stuck with the idea. Um, then unfortunately, fast forward, the numbers were disappointing and the stock breaks down. I mean, you can see it actually gapped right to it gapped right below like this rising downtrend, and it's hung out below it. So for all intents and purposes, the call spread, probably not going to work at this point. Uh, but the setup was a strong, right? It was a good setup. There's been instances where these types of recent IPOs have had explosive moves. So the risk to reward was interesting. The setup was attractive. So even though this one didn't work out, or at least not yet. I mean, it is a long shot to rebound from here, but for us, it was worth the laying out the money for it. Um, and there's gonna be more setups like this, and not everyone's gonna have a huge move higher, but like the ones that do, you can just see like these really crazy runs, and those are the ones. These are the types of setups you want to be involved with when they first break like the IPO range, because you just see like these really explosive moves, and even though Sonos didn't work, we definitely screen for these types of moves, and we definitely want to be involved going forward in these types of setups. Uh, assuming the risk to reward is attractive. So, as always, if you guys have any questions or comments, please reach out. Love to hear from you. Um, Hope you have a fantastic day of trading, and talk to you guys tomorrow, right?